Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So, this brings us closer. I am able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything.
The most important thing for your portfolio, that's the topic we're going to talk now. In every market context, your priority for your portfolio will change. It will shift. While the shift will be gradual, there has to be a shift. For example, let's say valuations are falling very rapidly. At that point, if you are holding a conservative investment stance in your portfolio, you could possibly take some more risks, increase your risk taking in line with your risk capacity and risk appetite. So that's an opportunity to take more risks, but in line with what suits you. Assume the reverse, where valuations are stretched, business performance is not showing promise, disappointments are beginning to creep in corporate results. At that time, you probably need to lower your risk taking and keep it even a good level below your risk capacity and risk appetite. So there are times when you raise your risk to the fullest extent that your risk appetite and risk profile permit, and there are times when you reduce your risk significantly lower than that. Now we are at a time when you need to do the latter. You need to lower your risk appetite in your portfolio and be very gradual in incremental investment decisions. I know it's a very difficult thing to practice because you're seeing people around you make very fast decisions, and some of these decisions also seem to be brilliant within days. But this is not a market to prove that brilliance. This is a market to prove that you're doing whatever it takes to ensure your longevity in equities. Because what comes after this market will threaten your longevity in equities. I say this with responsibility. Most of the people today think that there's hardly any risk, political or economic. That's the consensus. And when the consensus is so strong, one should develop a questioning attitude. One should try and be a contrarian. One should move away from that consensus, stand apart and look at that consensus, look for weak spots in that consensus, and then decide where you want to position yourself. I would think that today an investor should be investing in equities in such a way that beta in individual stocks is lower than the market beta. That is, if you are buying a new stock now, it should be a lower beta stock. So gradually you build lower beta stocks first and then see when you can actually buy into more aggressive investment opportunities. When you buy a lower beta stock also, you ensure that you don't overpay, because if you overpay, then that tends to alter the way the stock behaves, and by virtue of that, it increases the beta. So not only you buy lower beta, you ensure that the beta won't change after you buy. Why do you need to do this? It's very simple. Today corporate performance is lagging market expectation, and this lag is only widening. The market may lose patience sometime. It could be any time. And when the market loses patience, you will see larger investors bailing out of these companies which are disappointing. So this will further reduce the valuations of these companies and bring selling pressure in them. The best of companies can see this. The most moated companies will be witness to this. It's very important for you to position yourself correctly and avoid a significant downside if there is a sharp dip in the overall markets. So the most important thing now is to take your defensive stance, build your defensive positions, and then deploy capital incrementally with extreme caution. I'm sure a time will come when you can take more risks, but until then it's important that you survive in this market and you do well and retain your confidence, so that when the market is at its attractive best, your confidence supports you and you are willing to take risks without fearing what will happen. That's the most important thing right now. And I'm sure you will agree with me. Thank you for watching this video.